Welcome to The Explainer. Today we're not just talking about a currency. We're talking about a global dynasty, a system of power built around the US dollar that has shaped our world for nearly a century. So, let's dive right in.
Just how powerful is this dynasty? Well, take a look at this number, 88%. Let that sink in for a second. That's the percentage of all international trades that use the US dollar. We're talking nearly 9 out of every 10 deals on the entire planet. It's literally the language of global commerce.
And it's not just for trade. See, central banks all over the world, the big institutions that manage their country's economies, they hold their savings in foreign currencies. And look at this. The dollar makes up a massive 58% of all of those reserves. That's more than every other currency combined. Wow.
Now this brings us to a really interesting idea, exorbitant privilege. It sounds fancy, but what it really means is that because everyone needs dollars, the US gets to borrow money more cheaply than anyone else. And for Americans, this isn't some abstract theory, It means lower interest rates on your mortgage, on your car loan. It means the stuff you buy from other countries is cheaper. It's a huge, built-in advantage for the American economy.
So this all raises the big question for our explainer today. This incredible dominance, it didn't just happen by accident. It was built piece by piece over decades. So how did this whole dynasty even start? And maybe more importantly, in a world where power is always shifting, what could possibly bring it to an end?
All right, every dynasty has an origin story. And to understand how the dollar basically conquered the world, we have to go back and see how it first conquered its own country.
This timeline here really lays out the key steps. So, the journey starts way back in 1792 with the Coinage Act, which just created a national standard. Then you fast forward over 100 years to 1913, and the Federal Reserve is born, giving the system some much-needed stability. But the real game changer? That was World War I. While Europe was tearing itself apart, the US became the world's factory and its banker. It came out of the war as the #1 creditor nation, and that set the stage for 1944 and the dollar's official coronation.
So in 1944, you've got delegates from 44 countries meeting at a place called Bretton Woods, trying to design a new global financial system from the ashes of the war. And there were basically two competing visions. The British, led by the famous economist John Maynard Keynes, they wanted a totally neutral world currency, something called the Bancor. But the Americans, led by a guy named Harry Dexter White, they had a very different idea, a system built entirely around the US dollar. And well, since America had all the economic muscle, the White plan won the day.
And this was the result. The dollar became the absolute center of the financial universe. It was the only currency you could trade directly for gold, and every other currency was then pegged to the dollar. Now, the system worked for one very simple reason. At that time, the United States held a mind-blowing 2/3 of all the world's gold. The dollar wasn't just a piece of paper, it was a promise backed by a literal mountain of gold.
But here's the twist in the story. The very success of this system actually contained the seeds of its own destruction. The dynasty was about to face its first really big crisis. It's known as the Triffin Dilemma, and it's this fascinating built-in paradox. Let's walk through it. So, for global trade to grow, the world needed more and more dollars. Simple enough, right? Well, to supply them, the US had to spend more money abroad than it was earning. It had to run deficits. But pretty soon, the number of dollars floating around overseas was way bigger than the amount of gold America actually had in its vaults. The promise to exchange dollars for gold became mathematically impossible to keep, and people started to notice. Confidence began to crumble.
The breaking point came in 1971. Countries like Britain and France started calling America's bluff, showing up and demanding to trade their dollars for gold just like the deal said. So facing a run on its gold reserves, President Nixon went on TV and dropped this bombshell. This Nixon shock, as it's called, ended the Bretton Woods system in a single night. The gold window was slammed shut.
I mean, think about that for a second. The entire system was built on that link to gold. That anchor was just gone. Logically, the dollar should have collapsed. Its dynasty should have ended right then and there. But it didn't sink. So the question is, why?
Because, and this is where it gets really clever, in the chaos that followed, the US managed a brilliant pivot. It rebuilt the dollar's empire on two brand new, incredibly powerful pillars that had absolutely nothing to do with gold.
The first pillar was something called the Petrodollar system. In 1974, the US struck a historic deal with Saudi Arabia. And the deal was pretty simple. Saudi Arabia agreed to price all of its oil exports in US dollars, and then, this is the crucial part, invests its profits back into US debt. In return, the US provided military security.
It was a masterstroke. It linked the dollar to the world's most vital commodity, creating a constant global demand for dollars just to buy oil.
The second pillar was a little more subtle, the Eurodollar market. The easiest way to think about it is like a giant offshore swimming pool full of US dollars, totally outside of US regulations. This created a huge, freewheeling market for dollar lending and borrowing. It basically became the essential plumbing for all of global finance, making the dollar completely indispensable for banks and corporations everywhere.
So this new system, built on oil and these offshore markets, created a really fascinating modern paradox. The dollar became both a global shield in times of crisis and a powerful weapon for the United States.
Now check this out. This is what's called the safe haven effect. The 2008 financial crisis, it started in the US housing market. So you'd think the dollar would be the one currency everyone would be running away from. But no, the exact opposite happened. Its value actually surged. In a crisis, no matter where it starts, everyone rushes to the perceived safety and depth of US markets, which makes the dollar even stronger, even when the US is the source of the problem. It's wild.
But there's a flip side to all this dominance, a much sharper edge. Because the dollar is the plumbing of the financial system, the US can use it as a weapon. It can hit countries with sanctions, cutting them off from global trade. It can freeze a nation's reserves, like it did with Russia in 2022. This weaponization of the dollar has, frankly, made a lot of countries very nervous and very eager to find an alternative.
And that brings us right up to today. The dollar's throne is, let's say, more contested than ever before. So let's take a look at the challengers and the disruptors who are aiming to end this long-running dynasty.
The two main contenders you always hear about are the euro and China's renminbi. But, they both have some pretty critical flaws. The Eurozone doesn't have a single unified government bond market, that huge, safe asset that global investors crave. And the renminbi is held back by China's strict capital controls. You can't really be the world's currency if people can't move their money in and out freely. So for now, neither one is a true replacement for the dollar.
The competition is now shifting to a whole new battlefield, digital currencies. And this is a fascinating race with huge stakes. The US is kind of accidentally benefiting from private stablecoins, which are pegged to the dollar, and actually increased demand for it. Meanwhile, you've got China pushing its digital yuan as a way to trade outside the dollar system, and Europe is scrambling to develop a digital euro just to stay in the game. The future of money is literally being coded as we speak.
And all of this has led some analysts, like a guy named Zoltan Paziar, to argue we're witnessing the birth of a whole new system, something he calls Bretton Woods 3. The core idea is that after seeing Russia's reserves get frozen, countries will no longer trust currencies that are just backed by another nation's debt. Instead, they'll start demanding currencies backed by real stuff, by commodities. Imagine a world where currencies are backed by gold and oil again. It's a pretty radical idea that could change everything.
So, where does that all leave us? Well, for now, the dynasty holds. And this slide really sums up why. The dollar's greatest strength isn't its own perfection. It's the simple fact that there is no other currency, no other market in the world that can offer the same cocktail of size, safety, and trust that the US financial system can. It's kind of the best house in a shaky neighborhood.
And that brings us to our final, and I think most provocative question. Maybe the greatest threat to the dollar dynasty won't come from Europe, or China, or Bitcoin. What if the biggest risk is actually coming from within? From things like soaring national debt, political instability, a self-inflicted crisis that could finally shake the world's faith in its dominant currency. What do you think?